Okay, I have to make an update because I forgot one thing, and on the second I made a mistake. Now, the thing I forgot is that going back to the week of Brexit decision, the vote, 20 June 2016, there's a price gap here which may or maybe was not filled on 20 September. The price gap comes in at 13659. And the high on 20 September on my chart was 13657. So there's about 2.5 points that were not filled. Now maybe it won't be, but I can see a situation where it comes up, fills it, maybe just goes a bit above it and reverses. We've seen that many times. That was on Euro Canadian back here, back in September. When it came down, filled this price gap. I don't remember what that was from right now. The French election or the Dutch election. I think the French election. But it filled that price gap here. The first time it didn't quite fill it, went up, came back, filled the price gap, went off. We had a similar situation in the yen this week, where it failed, well, by my chart, it failed to fill the price gap by about 1 point, so it may come down again next week. It's got that kind of hanging man weakness look to it, but I'll go over that in that video later if I make it on US dollar yen. So there's a chance we come up for one more high as detailed in the update earlier tonight and fill this gap completely and then reverse. Now the mistake I made, maybe not so much a mistake, but being too certain about something, is that on the 4-hour or on the daily from 20 September, we have an impulsive wave here, which I marked down as 5 waves. Now, it's not clear, this correction is quite confusing because the high here did not break this high, the low here did not break this low. So what I explained in the other video is that it's possible we have 1, 2, and 3 with a slight truncation and we go up for another corrective wave. It's also possible, however, that we have the impulsive wave here, we have a correction up, and then this is its own correction, and now we have another here. And so there is still a bearish possibility beneath this high that this can roll over. Now for that to happen, there would need to be some kind of ending diagonal or some kind of hard reversal. It puts in a clear top on a lower time frame with a 5-wave decline on, say, the 15 minutes or 1-hour time frame, 15-minute probably. And then a setup will present itself for a third wave down beneath 20 September. So that is a possibility. It's not really my preferred possibility, though. I'm going to watch out for it next week, but I do like the idea that a correction will see support around 133, give or take 50 or more points. And we will see that break of 136 and change here on 20 September, and then reverse. So I think given the whole, the price pattern here and the framework overall and the larger price pattern from the 2014 corrective high, it makes sense to favor the downside still overall. So we'll see. If the week starts off with a corrective decline into 133, there will probably be a chance to buy. The move this week was insane on, what was that, a few days ago? I don't remember which day. Anyway, but the reversal was sharp and unexpected, I think. Everyone had this kind of ending out here. It broke that and reversed even stronger than it went down. So until there's some evidence of a top being put in beneath here, I'm going to continue to look for a chance for this to move higher. All right, so price gap and possibility of a high below 20 September. But if that price gap is fully filled, there should be a very good chance for a reversal. So even a break of 20 September high, I'm going to overall prefer the bearish view. Something spectacular would need to emerge to kill off the bearish view, really, and to change this to the advance I talked about in the other video. All right, bye-bye.